What is GDP? Gross domestic product (GDP) is the total monetary or market value of all the finished goods and services produced within a country's borders in a specific time period. As a broad measure of overall domestic production, it functions as a comprehensive scorecard of the country's economic health. Though GDP is usually calculated on an annual basis, it can be calculated on a quarterly basis as well. In the United States, for example, the government releases an annualized GDP estimate for each quarter and also for an entire year. Most of the individual data sets will also be given in real terms, meaning that the data is adjusted for price changes, and is, therefore, net of inflation. GDP includes all private and public consumption, government outlays, investments, additions to private inventories, paid-in construction costs, and the foreign balance of trade. Exports are added, imports are subtracted. There are several types of GDP measurements. Nominal GDP is the measurement of the raw data. Real GDP takes into account the impact of inflation and allows comparisons of economic output from one year to the next and other comparisons over periods of time. GDP growth rate is the increase in GDP from quarter to quarter. GDP per capita measures GDP per person in the national populace. It is a useful way to compare GDP data between various countries. The balance of trade is one of the key components of a country's GDP formula. GDP increases when the total value of goods and services that domestic producers sell to foreigners exceeds the total value of foreign goods and services that domestic consumers buy, otherwise known as a trade surplus. If domestic consumers spend more on foreign products than domestic producers sell to foreign consumers, a trade deficit, then GDP decreases. Thanks.